Vivek, I do want to ask about NVIDIA as well, because we're seeing that stock recover to such an extent that now it's within spitting distance of its record high once again. Do you think it surpasses it? And what are sort of the catalysts you're looking for at this point for an NVIDIA to get there?
Sure. We have a $180 price target, so we definitely see upside to the stock. What I think is going to drive it is first and foremost, they had a few months in between where it was harder for them to ship a lot of their new racks, right? The new Blackwell and Blackwell Ultra racks. Now I think that logjam has been cleared up, so they are shipping them with very high intensity. Number two, I think people were concerned about what happens with restrictions in China, and now China is basically out of their model, right? In fact, if I look at the entire semiconductor industry, right, the names that we cover, NVIDIA has the lowest exposure to China right now and is still able to put up, growth rates that are in excess of 40 to 50%. So I think as people start to realize that these concerns about the spending environment, about China restrictions are in the rear view mirror, I think there will be a lot more interest in going after this name. Because if you take a step back, look across the S&P 500, right? It's trading at 2 times earnings growth. If you look at the so-called Max 6 or Max 7 outside of NVIDIA, they are trading at 2.5 to 3 times earnings growth. And you have NVIDIA stock that is trading less than 1 times earnings growth. So we think it is, it is really a value stock at these levels, given the kind of growth opportunity, the kind of earnings leverage that they have in their model. And then finally, this opportunity is not just limited to what we see today, which is AI. In another few years, we will start to talk more about edge AI, about robotics, about autonomous cars, and the company's technology is very leverageable into a lot of these new markets as well.
Darling, artificial intelligence, AI. Since 2023, Jensen Huang, the CEO of NVIDIA, has promoted the concept of sovereign AI, which is based on the premise that each country should be in charge of its own AI that is influenced by its own language, culture, and values. Europe is now beginning to pay attention to this message. The chip giant announced intentions to create an AI-powered industrial cloud for European manufacturers only this week, partnering with Deutsche Telekom to launch sovereign AI in Germany. By 2026, this so-called AI factory, which will be administered by Deutsche Telekom, should be operational. It is intended to assist European manufacturers in using AI into a variety of fields, including digital twins, simulation, robotics, and design and engineering. Actually, this is only the start. With plans to extend its chip footprint into data centers in Spain, Italy, the UK, Finland, and Sweden, NVIDIA is also exploring outside of Germany. Therefore, is NVIDIA's expanding contribution to this growth worth investors' attention, given that sovereign AI is finally gaining traction in Europe? NVIDIA, a California-based company, has quickly become a leader in the computer industry because of its revolutionary developments in AI and GPU technology. Data centers, driverless cars, high-performance computing, and immersive gaming are just a few of the current innovations made possible by NVIDIA's chips, solidifying the company's position as a major player in the digital revolution. NVIDIA has solidified its position as one of the most valuable firms in the world with an astounding market capitalization of $3.5 trillion. However, the chip giant's explosive growth has begun to slow down in 2025. Investor mood has been impacted by a number of geopolitical challenges, such as rising trade tensions and tariff disputes between the United States and China, growing investor hesitancy regarding the rate of AI spending, and the introduction of new competing chips. NVIDIA is up just 7.3% so far this year, which is a long cry from its previous pace but still surpasses the tiny 1.7% gain made by the S&P 500 index over the same period. This is after the company's astounding 794% return over the previous 3 years. Large, fast-growing companies like NVIDIA are rarely inexpensive, and given its dominance in the AI market, this premium is to be expected. The stock is now trading at 35.4 times forward earnings, which is significantly higher than the industry average. On the plus side, though, that valuation is actually more fair than it has ever been. NVIDIA's current multiple indicates that, although still pricey, the stock isn't as overheated as it once was, especially when compared to its 5-year average of 47.33x. When the Chip King revealed its fiscal 2026 first quarter earnings results on May 28th, all eyes were on NVIDIA, and once again, it exceeded forecasts. Revenue blew over the $43.3 billion expectation, soaring 69% year over year to $44.1 billion. NVIDIA's data center division once again took center stage, exhibiting rapid expansion as the business continues to fuel the AI revolution. The data center division of NVIDIA produced an impressive 73% yearly increase to $39.1 billion, which accounted for a commanding 88% of the company's total revenue. In the meantime, its gaming division increased 42% to $3.8 billion due to the demand for high-performance 3D chips. The growth party was joined by its robotics and automotive sector, which accelerated 72% year over year to $567 million. When the U.S. government decided that NVIDIA's previously approved H20 chip for China would be subject to additional restrictions, the company encountered a regulatory speed bump during the quarter. The effect was expensive. NVIDIA projected that it lost out on $2.5 billion in potential sales and incurred a $4.5 billion loss for excess inventory associated with the chip. The company's adjusted gross margin ended up at 61%, but it would have been significantly higher at 71.3% had the China-related damage not occurred. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
That's why, in our view, the quarter, I think guidance would be generally in line, maybe slightly better. But I think what the streets focus on is what does this mean for medium-term outlook? Does this change any of their sort of plans? And I think this is going to be a huge vote of confidence for the AI revolution. In my opinion, this is going to be a catalyst that you'll see tech new highs.
You do. You think everything, if in fact you're right that everything gets floated upward.
I mean, look, and we've talked, obviously it started off white knuckles. We navigated through it. You've seen steps off the cliff in terms of de-escalation of tariffs. But it comes down to this is a fourth industrial revolution. And when you look at the amount spent, for every dollar spent on a NVIDIA chip, there's a $10 multiplier across the rest of tech. That's why you see from software to nuclear, ACO and others. And I think that right now, the use cases, as you've talked about a lot, use cases are playing out. Palantir, Snowflake, and I think you're going to see more.
So why is it flat this year, NVIDIA?
Because I think it's all about, right now, they're in the eye of the storm. And I believe this quarter is going to be a huge positive inflection point. We call it 175, bull case 225, to what I believe this is going to be the charge to not just but I believe $5 trillion market cap and look at the next few years, despite the tariff fears.
So you think, after the call today and tomorrow we're sitting here, you might be on with us again, we're going to say, now we've got what? We've got more visibility to 27 and 28 in terms of earnings, and you feel comfortable with the target price in the 200s?
And I think that's maybe even conservative relative to my view of physical AI. We're only 2% through in terms of AI penetration, really zero Europe, zero in terms of Asia ex-China. So you start thinking, and there's only one chip fueling it. So my opinion continues to be the AI party. It started at 9 p.m. It's now about 10:30 p.m., goes to 4 a.m. And it's led ultimately by, you look at Jensen, you look at the chip, you can't go anywhere without that. That's why Middle East, everyone's focused on, could I get up in line ahead of China? That continues to be the focus.
In terms of profitability, NVIDIA reported adjusted earnings of $0.81 per share, which exceeded forecasts by 8% and increased 33% year over year. That amount would have increased to 0.96 in the absence of the drag from the H20 chip charge. However, the company's Q1 performance seemed to satisfy investors, as seen by the stock's 3.3% increase on May 29th. NVIDIA is estimating $45 billion in revenue for the second quarter of fiscal 2026, give or take 2%. This amount already includes an estimated $8 billion in losses from recent export control limitations that affected its H20 chips. With a 50 basis point margin of error, GAAP and non-GAAP gross margins are predicted to be 71.8% and 72%, respectively, in terms of profitability. NVIDIA is still aiming high, with mid to 70% gross margins by the end of the year, despite the challenges. Overall, NVIDIA's stock continues to hold a resounding strong buy consensus recommendation, demonstrating Wall Street's consistent faith in the company's long-term prospects. 37 of the 44 analysts who have made recommendations are recommending it as a solid strong buy, 3 are recommending a moderate buy, 3 are recommending hold, and 1 is recommending a strong sell. With an average analyst price objective of $174.02, there is a 23% chance of price growth above the current levels. Given the street high price objective of $220, NVIDIA may see a 55% increase in value from this point on. NVIDIA is putting itself at the forefront of Europe's AI aspirations as sovereign AI grows popularity around the continent. The company is making sure that nations continue to rely significantly on NVIDIA's technology, even as they work toward AI independence, by forming strategic alliances like the one with Deutsche Telekom in Germany and expanding into European data centers. Export limitations are limiting sales in China, so our European expansion creates a new and timely growth path. Furthermore, considering the business's solid foundation and ongoing support from Wall Street, NVIDIA's most recent European expansion adds yet another potent dimension to its growth narrative. Investors should pay heed to NVIDIA's strategic move in a market where regional AI independence is becoming a priority. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Yeah, well, you know, it's hard to get straight answers out of China, especially from the Chinese government. Josh Brown, there are a number of other stocks in the market, and I'm thinking about software mostly here, that follow NVIDIA's lead. I'm putting Dell and Supermicro and some of those equipment makers aside. What is your expectation for how the AI trade overall digests the overall optimistic story that Jensen not only told to analysts, but told us here on CNBC tonight? What does that mean for the overall narrative of AI's growth and potential?
So I think, broadly speaking, people are going to wake up tomorrow and digest 48 sell-side notes, most of which will be some form of overweight / bullish / accumulate. I know they keep coming up with new ways to say we like the stock. But on balance, what they're going to read from the analyst community is, I think, once again, like a sober version of awestruck. I think the sell side is going to try its best to keep its enthusiasm in check, but they're talking about the second half launch of Blackwell Ultra on the conference call. And somebody's like, well, wait a minute. You had a hiccup with Blackwell. It launched a little bit late while you dealt with that. Are you still seriously coming out with the upgrade already in the second half of this year, the new version? And Jensen's like, yeah, we're doing this. So I feel like you're going to get a buoyant tone from the sell side, and I think that will extend to the other names that you mentioned, John. But NVIDIA is really unique. I don't think there's a substitute. And again, at 29 times forward, there doesn't need to be. I don't think you have to buy the fourth best. Look at the people that bought AMD a year ago. It's in a 50% drawdown. You know how many people bought that stock saying, I don't know, Lisa Su and Jensen Huang, they're actually cousins. Jensen used to work at AMD. I missed NVIDIA. I'll buy AMD. I always find that to be a mistake. It's not that none of the peripheral stocks can work. I guess what I'm saying is if you have a portfolio without NVIDIA and you're trying to make a bet on autonomous vehicles, machine learning, augmented reality, virtual reality, data center, don't miss this name. And don't go looking for the poor man's version.
I got it.
It's right
pick
here
your
in front of
favorite. You pick your favorite, and you got your favorite, and it's working. Cassie, you're meeting with clients talking about AI. How much are they talking about the possibilities and trying to understand that and the performance that they need for those possibilities versus concerned about costs at this stage? Where is the conversation with these people you're talking about?
The conversation is very little about costs, very much about possibilities, and also very much about the completely different paradigm that some of these technologies require in terms of thinking about ROI. What does it mean to figure out the value of a generative AI system working at scale in the enterprise? And so what we see is for individual users, it's enough that it feels useful. But scale demands to be measured. When we're going to do things seriously at scale in the enterprise, you have to rethink all your frameworks of value and of automation. And we are on the cusp of management getting the hang of that. And that is going to be such a phenomenal blossoming of use cases. And then we're going to talk about, oh no, how do I actually get enough of what I need, not just in terms of hardware, but also in terms of experts who can help.
All right, Josh Brown, last word for you here. Is this the place where you can buy NVIDIA still?
Yeah, I mean, I would love it. It rallied 4% into the print tonight, so I would love it if it pulled back 4%. For people that are not in it, I'm not buying more just because it's already big enough in the context. It's a 10,000% return since 2015, so I don't need more NVIDIA personally. But if somebody does not have this in their portfolio, I don't think it's a wild stab in the dark to be buying it here. And, quite frankly, if you're not in it, I think the lower it goes.
The most significant technical advancement of our time is artificial intelligence, AI. AI is predicted to completely transform society in a matter of years. You might soon be able to do your laundry with semi-autonomous robots and then get groceries in a self-driving automobile. Life is going to change drastically, perhaps for the better. NVIDIA, the top provider of AI chips that power everything from data centers to robotics, is at the epicenter of this so-called fourth industrial revolution. Over the last 36 months, NVIDIA's stock has produced an impressive 829% return, converting a $10,000 investment into $92,980, thanks to its pivotal role in the AI value chain. That may sound amazing, but Palantir Technologies has outperformed it. Palantir has returned an incredible 1,744% over the same 36-month period, turning that $10,000 investment into $184,370, nearly doubling NVIDIA's remarkable profits. Despite being in opposite lanes, both businesses are riding the same tidal wave. Palantir provides the software layer that analyzes the data and makes practical decisions possible, while NVIDIA constructs the computing engine. As a key AI holding, which of these leading innovation stocks is the superior investment? Massive size and new challenges were both evident in NVIDIA's Q1 fiscal 2026 performance. Revenue increased 69% year-over-year to $44.1 billion, with data center revenue rising 73% to $39.1 billion. However, the situation in China is gradually getting worse. Due to new export licensing regulations, NVIDIA lost $2.5 billion in H20 sales in the first quarter and anticipates losing $8 billion in the second. With market share in China dropping from 95% to 50% as a result of these restrictions, CEO Jensen Huang bemoaned the fact that the $50 billion China market is essentially closed to us. Palantir, on the other hand, is reaching escape velocity. Compared to prior quarters, Q1 2025 revenue of $884 million increased 39% year-over-year. For the first time in the company's history, U.S. revenue surpassed a $1 billion annual run rate, with U.S. commercial revenue soaring 71% to $255 million and U.S. revenue soaring 55% to $628 million. Additionally, Palantir increased its full-year 2025 outlook to $3.89 to $3.9 billion, which reflects an estimated 36% year-over-year growth. Even with conservative projections, the global AI market is expected to reach $826 billion by 2030. NVIDIA and Palantir Technologies hold different positions along the AI value chain within this enormous opportunity. Leading the infrastructural layer and supplying AI's computational core is NVIDIA. By 2028, CEO Jensen Huang predicts that yearly data center expenditures may surpass $1 trillion. With new alliances to create AI supercomputers in the US, Saudi Arabia, the UAE, and Taiwan, the corporation is changing from a chipmaker to an AI factory builder. NVIDIA is leading the way in agentic AI reasoning with its Blackwell Ultra architecture and DGX SuperPod systems, which is a crucial step in the development of intelligent, self-governing systems. Palantir, on the other hand, works at the application layer and assists businesses in using AI in practical applications. The company is in the middle of a tectonic shift, according to CEO Alex Karp, since the need for huge language models has turned into a stampede. Palantir has a realistic foothold in the fight to integrate AI into daily operations, since it is already making money off of AI through government contracts and commercial deployments, in contrast to many AI companies that concentrate on research or infrastructure. NVIDIA trades at 46 times trailing profits, which is significantly lower than its 5-year average price-to-earnings ratio, PE, of 78, even though it commands enormous sales and dominates the AI infrastructure market. Its forward PE of 30 indicates that the market is taking into consideration export concerns associated with China, as well as a natural slowdown in growth from its massive base. On the other hand, Palantir trades at valuation levels that defy conventional measures. The stock has a forward ratio of more than 2:30 and a trailing PE of more than 600. Investors' perception that Palantir is at a significant turning point is reflected in these high multiples. The market seems to be placing a wager on the company's capacity to maintain hypergrowth while increasing its margins, a lofty standard that offers little opportunity for error. Although Palantir stock has performed incredibly well, perfection is already priced in at 600 times earnings. Any lapse in execution or growth slowdown could lead to a drastic repricing. Compared to the multi-trillion-dollar AI business, its $3.9 billion revenue run rate is still small despite its rapid expansion. The risk-reward profile provided by NVIDIA is more alluring. The company, which is almost 40% below its recent historical average at 46 times earnings, combines a fair price with a number of potent growth drivers. Robotics, a generally underappreciated market, has the potential to be a major driver over the next 10 years, and the Blackwell product cycle is only getting started. Although Palantir is still a great long-term growth story, its present value necessitates perfect performance in the near term. NVIDIA is clearly the more robust core AI investment in this comparison. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.